The leading index provider to the exchange-traded funds industry, MSCI, has announced composition changes to their index suite in the firm's semi-annual review. Highlights of this review was the decision to include U.S.-listed shares of Chinese companies within the relevant indices, a move that will see significant buying and selling activity in tracking assets such as ETFs.
The MSCI has just said ni hao to 14 Chinese companies listed in the United States that include Alibaba, Baidu, and JD.com. Investment experts like Brendan Ahern say it's about time.
Well, I think the prominence of Alibaba's initial public offering, the largest IPO ever in the United States, was really very high profile. And investors would just ask, how is the largest Chinese company listed in the United States not part of the definition of China?
The new additions skew heavily towards tech and e-commerce, reflecting their growing power in the Chinese economy. Previously, most Chinese companies included in the MSCI were in the financial sector.
Being included in the index is good news for shareholders of the 14 Chinese companies. That's because exchange-traded funds and index funds that track the MSCI have to buy shares of those companies. That leads to an increase in trading volume, which tends to lead to an increase in price.
Shares already got a big boost after MSCI announced the decision on November 12th, but traders say there is room for them to grow.
You will see a gradual increase in the volume of those shares as all the ETFs really start to rebalance their portfolios over time. So if somebody were to get in right now, you probably will see a bump over the next 2 to 3 months in each of those names.
In June, MSCI said it would not include mainland-listed shares, or A shares, in its indices because it is so difficult for foreign investors to access them. But MSCI is currently speaking with Chinese regulators, and most market watchers believe they will ultimately be included.
And that will be a remarkable thing to see. You want to talk about a big trade occurring if they start including the A shares from both Shanghai and Shenzhen.
Karina Huber, CCTV, New York.